Hello, good morning, everybody. So I'm doing a little bit late. I said I would do it yesterday, but I was too busy with the mentoring and everything. So we are looking now at the DXY Euro USD chart update after the monthly close of last Friday. So what I would like to show first is this candle. I spoke about this candle on Friday, and we see we have a bearish, what usually the market calls a bearish candle because it's an inverted hammer. What we need to understand about the candles is what they show. They show the high, the lows, of course, and the body is showing where we have the volume. So in this candle, it's not necessary to remember the name like hammer or whatever, doji or all the funny name they put. What is interesting to know is where has been the volume and how big can be the wick, because the wick is telling us we had a move but not a sustained move. We had a move that failed and came back like here we had. So we have a small body, a big wick on the top side. Usually this is an indicator of a reversal. On top of that, we have had on the um, DXY for a long time. I've been showing this trend line. This is a daily trend line. We broke through it in May. We came back to retest it for the first time middle of June, 15th of June. Then we came back to retest it on the 15th of July, like exactly 1 month after. For the one that didn't, so it's exactly the full moon cycle. Just funny. I don't use that, but I posted it yesterday. So you see 30 days, we retest, and now we are pulling back from there. Of course, we have a support area here, a daily support area. We have, we look at that on a weekly base. We have a big support area there with this order block, with this support. That's what I posted yesterday on the chart. So this is what I had posted for many days, and it's important to keep that in mind in case. I don't think it's likely, but I am always ready for every possibilities in case we will have a third touch, and this third touch could come back in this area where we have more FIPS and things. But I don't think it will now for several reasons that I already explained in the Twitter feed, especially the monthly um, setup. So beside this fib, this trend line, retest of the trend line, we have an important thing is we had a monthly close, and that's what I pointed last week. We had a monthly close under the 38.2 fib. This is the all-time fib of the DXY. So I don't like so much that fib because this area is an area where we didn't had really the euro made in 85. It was not on the market. It started like in a little bit before 2000. So in that case, I really prefer, I use this one and I posted it thousands of times, but in the retracement, in this case, I would better look at this fib here. Let me change the color. It will be easier to see, of course. So I prefer to use this fib, and what we see is we stop there. We take off the other retracement, and you see on this retracement we stop to the pip on the 76.40 fib, which is something which is used a lot in the market. Remember, because many are taught that the 78.6 is the fib. It's not. The fib and the real number from Fibonacci suites is 76.40, is not 78.6. This one is a trader used fib, invented by traders, but it's not the real Fibonacci fib. It's important to keep that in mind because in many cases, you wait for the 78.6 and you will never see it touch because the price stop on what it should do, which is a 76.40. So it's important to note that because we stop to the pip on this one, and now we could have a reversal of that pullback inside this move down. So we had the pullback inside here, and we can see a reversal. The other thing we have here is an ABC. So this ABC is here. I will I will take off that ABC. We can keep here, just mark the 78.6 fib, so we know why we stopped there, and we keep that in mind. Okay, and I will take off this retracement from here. So the other thing we have is that ABC, ABC. So this is a perfect ABC. You see we stopped on the 76.40 I just mentioned, and not far from the one-to-one extension, just a few pips away. So this one is not well because it's right to the pip. So it's important to note all that. What we have now, we are sitting on the 78.6 fib here, which will provide some bounce on the DXY for sure. And then we have the 76.40 coming down. The other thing I'm looking at now is the small inside ABC, which is that one. It's a daily ABC. That's what we are using now. And that's what I'm looking at actually, because we should see the one-to-one extension here. We should see the 127 extension too, and we should go on. So it's important to note that when we will break this level here, when we break this level, we will run for this one. So when the most important is to look at this retracement, the previous retracement we had there, not the pink one, this one with a 76.40. And in that case, let me take off that one. In that case, the next important support will be here at 101.87. That's where we have the next important, the sister or the brother fib of that one. So that's where we are now. And as I said, we will see some bounce here for the reason I just show here, which is the 78.6 fib. We will see some bounce and we will come back inside. It's this fib, this chart I posted yesterday is the same chart, but I added there some information, and the information I added there is some weekly, daily, intraday supports. So if we look at it, let's check a 4-hour chart. So you see this is a 78.6, but where we bounce is this order block here, the daily order block top that I mentioned yesterday, and we bounce from there to the peak. So that's exactly where we are bouncing from. So what we can expect now, we look a little bit lower to see the reaction on the fib. We can expect a reaction on the 61.8. We can expect a reaction on the 50%, or a little bit higher if we come back to the 38.2, which is still possible, and then bounce back, especially with the Pelosi trip in Taiwan if she does. So we will see what happens with that, but we are ready for all options depending on what market is doing. So you see 71.80 will be the first area where we will see probably a reaction soon on the DXY after the touch here of the daily order blocks. Then we have the next level I mentioned and the fib that we just spoke about in the first part of the video. Now I will look at Euro USD, just making a